When it comes to the day you retire, that likely means you've done a great job of saving, you've got a nice nest egg, maybe you've got your house paid off, and more. And oftentimes the questions we get as retirement advisors is, do I still need life insurance in retirement? Today, I want to talk to you about why some of the most successful retirees use life insurance, how they leverage it for tax-free income, and a lot more. Keep it right here. Good day, everybody. Chris Heerlein here of REAP Financial, host of Retire Ready TV on KXAN here in Austin, and host of Wealth Radio every Saturday on News Radio KLBJ. I want to encourage you to go to reapwebinar.com, join us for an upcoming webinar. And if you enjoy our channel, be sure and hit the subscribe button and hit the bell for notifications. So today I want to talk to you about how some of the most successful retirees leverage life insurance, how they utilize it in their planning to ensure that they have a lasting legacy and they have control over their taxes in retirement. Keep it here. So let's dive in. Why does life insurance still matter for some retirees? You know, you think about life insurance when you took it out maybe in your 20s, your 30s, your 40s, you had, maybe a young family, you had a mortgage, and some liabilities that would need to be paid off, obviously, if something happened to you. But see, as your net worth continues to grow and you start heading towards those retirement years, generally, responsible retirees have less and less liabilities, right? You've got a nest egg that could support your spouse or family, grandkids, whomever, in the event something happened to you. And so oftentimes we see families will let go of life insurance that's unneeded. And the last thing we want to see families do is pay for life insurance they don't need. But in many cases, your life insurance is maybe like a term policy, right? You purchased it 20, 30 years ago. You got coverage for a certain period of time, that 20, 30 years, and then it expires. And oftentimes you have a choice to renew it. It's very expensive when you go to do that. So oftentimes we're encouraging families not to renew a term policy. And as you know, as you get older, life insurance can get more expensive. But today I want to talk to you about how successful retirees, how they leverage the power of life insurance. Understand that when you leave a life insurance death benefit to your heirs, to your spouse, whomever, in most cases, that death benefit goes to them 100% tax-free. So if you leave your IRAs, if you leave your 401ks to family or friends, that generally is going to be all taxable to them. So here comes the opportunity to talk about the tax leverage with life insurance. So oftentimes we'll see families that have a value to leave money to their heirs or a value to leave money to charitable causes. And so they want to enhance their legacy. So some cases, a family will set up a properly structured IUL, universal life policy. And this type of policy is very flexible. It's going to be based around, your age, how much death benefit you want, but then you can set up either a one-time payment to buy that life insurance, or you can set up monthly or annual premiums. And those premiums are generally just paid right out of retirement funds. Many cases, our clients will use their required minimum distributions in their 70s to fund these. But see, what happens here is you're able to leverage dollars that you've saved and immediately enhance your estate. And an example I'll give you, let's say that you wanted to leave money to heirs. You have a $3 million nest egg currently, and you're saying, hey, I'd really like to take it to 6. Well, you get the life insurance established, and that life insurance is with you day one. So your estate, as soon as that first premium is paid, has grown now from 3 to 6. The $3 million in the death benefit or the life insurance policy is 100% tax-free. So that's a simple way that many families will leverage the power of life insurance. But I want to talk about a tax angle. A lot of retirees consider taxes in retirement to be one of the largest expenses they have. Oftentimes didn't even see it coming. So in many cases, successful retirees can fund these policies, build cash value, and then in later years of retirement, borrow against the policy. When you borrow against the cash value of the policy, those dollars come out tax-free, allowing you to reduce your monthly and annual income, more control of your income in retirement, right? Then that loan that you've taken on the cash value of the policy is paid off when you pass. So the death benefit would pay off any policy loan on the policy, and then your heirs or spouse would walk with that tax-free death benefit. Ultimately, when you leverage the life insurance cash value, what you're doing is you're reducing your annual taxable income. So that means that you're potentially paying less tax on Social Security, you're paying less tax on your required minimum distributions, and more. And so again, life insurance seems to be one of these things that we need up to retirement, and then often we let it go. But today we're talking about ways that successful people can leverage the tax-free nature of this to garner more control of their taxes in retirement.